All right, today's Monday, June 27th of 2022. So what we have going on today is the market has run up pretty strong over the last week, I would say. And now looks like it's starting a correction phase. So, markets don't go straight up and they don't go straight down. So they move in kind of wave patterns, just up, down, up, down. So no, we're on a down phase right now. So we have to trade accordingly. Well, I wouldn't say we're on a down phase officially, but it's looking like it's the beginning of a down phase. So this
Okay.
support level right here is going to be really important. If it can hold here, yes, we will continue up higher. But if it breaks through here, we're going to be on our way down. We're going to look for a trade off that support. So that's what we're looking at. Good morning, Tomas.
Morning, man.
Good to have you. Yeah, so yeah, I'm just going over today what we're looking at and kind of reviewing what's been going on up to this point and what we're looking for today. So, once again, last week we ran up on ES all the way up here. And once again, the markets don't go just straight up in a line. They go in kind of wave patterns, up, down, up, down, up, down. So it's looking like this is a correction phase. We're at the beginning of a correction phase where we're going to start moving down now. It depends if it holds this support level or not. If it holds this support level, we will be going up higher. But the way it looks this morning and just how steep it ran up, I could see a strong possibility that we head down. So this is a decision area right here. I'm kind of trying to see what happens here. It could be messy, could be sideways, but eventually it's going to fizzle out. From this whole area, it's either going to break back up or it's going to break down. So as of right now, I don't want to try to predict too early. I just want to see how the market reacts here. So a lot of trading is just a waiting game, waiting for the picture to clear up. And once it clears up, then we can make a confident trade decision. But when it's in a area where it's trying to make a decision and it hasn't made the decision yet, I mean, each situation is different, but it can be a little tricky to try to trade while it's trying to make a decision. So because it's in this area and this is the morning, it could be possible that we don't get a quality trade in this morning. So it really depends what happens here. But I can see this morning where it just kind of stays in this little range inside this box and doesn't really get out. And then maybe in the afternoon, it'll finally break out and there'll be a nice quality trade then. As at this point right now, if anything, I'm more leaning towards a possible bounce here. So I am kind of interested in a long trade here, but I gotta see I just gotta see how it reacts a little more. Any questions or comments so far?
Which stock are we looking at right now? Or
Oh, okay. So what we're looking at, it's not a stock. It's the SP 500.
Oh, okay, yeah.
So it's a stock index,
Mm-hmm.
but it's it's called futures, and I'll explain a little bit more about that more in depth, another time. If
Okay.
if you're not already aware of it, but basically it's something to trade and make money, just like a stock.
Okay. I've heard of it. Yeah.
Yeah. And so this is actually probably the most traded financial instrument in the whole stock market, is the ES futures. So heavily traded from all around the world, all around the country, all around the world. So this right here is really interesting. Once again, this is the support level. This big line here, make it even thicker. All right, so it dropped right down to the support. It came up, came down, so I could make another run up, but once again, I'm not going to be too aggressive in trying to look for something. I kind of want to see if it really is going to make its way up or if it's going to make its way down, because there's a couple factors at play here. The thing is, it has moved up so high since it started running up. And so does that mean it can't go higher? No, it doesn't, but it's just the higher it goes, the more it tends to lose steam. So I just need to see a little more. Let's see. Kind of interested in a long here though. Let's see. I might try one. We're at the bottom of this trend, of this trend channel here. So yeah, if anyone already has their stuff ready, we as far as like buying and selling, we can try one together, and I'll let you know when we're ready. But yeah, if it continues to hold here, then I like it. All right, I'm gonna try one here. We're just gonna put our stop right below. And we're just gonna put our target like maybe right here, around our midline right there. So on the left chart here, you can see the price, how much we're profiting. On the right side, you can see the number of points. I'm just going to take the profit right there. Yeah, sometimes it just barely gets to the profit, and then it doesn't really actually hit the profit, and then it'll just come all the way back down. So because of that, sometimes it's close by, I just exit the trade, because if it's just like one small tick away, it's not the biggest deal in the world. It's not worth missing the trade just for one tick, and then it comes all the way and you get nothing. So yeah, nice trade there. Kind of a little scalp trade. And here's the numbers from that. So that trade we got in 3903.5 to 3907.25, which is $187 profit. And that was a 1 minute trade. So 187 in a minute, pretty good.
Yeah.
Yeah, pretty nice. So yeah, this is what I mean by, it, even if you can't come every single day, whatever days you can come to these sessions, and I mean, you've been here, what, just less than 20 minutes now, and you could literally just, if you were here to catch that trade, and then if you're busy, then go on with the rest of your day.
Yep.
So that's the beauty of futures trading, and we don't read any market news. It's not like stocks. We don't read any market news. We don't have to pay attention to all these extra stuff. We're literally just reading charts. We read charts and we trade the charts, and that's it. So it's actually, if anything, it'll save you more time than trying to trade stocks, because even if you're trading stocks, you still have to read the chart. You have to read the latest news and all the extra stuff, and you have to read the charts. Where with futures trading, it's all technical. We're just looking at the chart, and we're just making a trade decision based off what we're looking at. So it's the least time consuming. Even people who trade options, there's just so many more factors to it. They have to consider all the Greeks, the time decay, the delta, stuff like that, the VIX. It's just too much going on.
Yeah.
This is the most simple, straightforward way to trade in the stock market. And the only reason why more people don't do this, because they're not aware, or they're not familiar with it, let's say. But this is like the best kept secret in the whole stock market, is futures trading. And I would say most day traders trade futures, at least that I've run across. So, and most of them trade the ES, because there's other stuff like there's the NQ for NASDAQ. You could trade gold, oil. You can even do some Forex futures. But most people trade what we're looking at right now, which is the SP 500 futures, which is called ES. But I mean, this is why, just what we just did here, how quick you can make money, and you can make as much or more than somebody makes working 8 hours a day in just an hour or less of trading. So that's the potential of it. Not to say everyone will do that, but if you take the time and you really get good at it, you can make more than someone makes in an 8 hour day in just an hour or less. Yeah, so any questions, thoughts, or comments so far? Yeah, if you guys ever are wondering anything, feel free to ask. This is the time. Or you're just curious about something. No, but once again, these are the profits we've had so far. And all these are pretty much an hour or less of trading. All right. From our live streams. So once again, this is more than I mean, just our first 4 days, there's more people than people making an 8-hour day. So, and we're making this in like an average of hour or less. So pretty much all green days, we had 1 day we didn't trade, just no opportunities, no good opportunities. And then we had 1 red day. And that was a pretty tiny red day compared to all of our average winning days. So that's how we want to keep it. If we have a red day, we want to keep it pretty small, small and manageable. And that red day pretty much just took out our previous green day. So these kind of just cancel each other out. But beyond that, it's just all profits. And so up to this point, we've made, 2,300, right? You add today's profit, then it's 2,500. So in 11 days of live trading with each other. So, I want to get everyone to the point where this is all, realized profits for everyone. So whatever it takes for people to get comfortable to the point where they're ready. Like I said, we're only here an hour. We're only here an hour a day, so it's not a lot of demand of people's time. But in that hour, you could even consider that a part-time job, right? You got an hour part-time job, but in that hour part-time job, you could potentially make more than your full-time job. So, once again, we're inside this box, and like I said, in this box, things can get a little funky, which is kind of starting to. Let me see. Yeah, so this would be the box, and like I said, it could mess around like this for a while because this is a decision area. So it's not something that I'm gonna continue trying to trade. That first trade, it was just a trade where I could see a bounce, and it did give a decent bounce, but I'm not going to continue trying to stay aggressive on it because once again, we've run up so far already. When the market runs up really far, it tends to lose steam. In addition to that, we have this humongous red bar here. So that's showing a lot of selling strength this morning. And because of that, we have to respect the possibility that may have topped out, and now the sellers are taking over and they might be trying to take this market down. So I'm not trying to stay aggressive on trying to take trades to the upside. Oh yeah, another thing about futures trading, which is nice, is we can go long or short. Long means we're trading and we make profit if the market goes up. Short means we're trading, we make profit if the market goes down. So, and it's the same way. There's not any extra penalties going one way or the other. You don't make extra, you make equal. You just choose which way you're gonna trade. And I know in stocks, if you try to short, there's a little more risk to it. I forgot the exact details, but it's a little trickier trying to go short in the stock market. And it's from what I've heard, it's a lot more risky too. But yeah, it's very simple in futures trading. There's only two things you can do, really. You can only take a long position or a short position. And once again, all you're doing is taking a trade that it's going to go up or down. And if you're taking a trade on the upside and it goes down, then you get a loss. If you take a trade on the downside and it goes up, then you get a loss. But if you're correct, then you get a profit. So what we just did here earlier, we took a long trade. So we'll make profit if the market goes up, and it did go up. So we made a profit there. But let's say the market starts going down, then we're actually going to be looking for a short position, and we will make profit if the market goes down. So any questions so far with any of that? Yeah, so yeah, feel free to type in the chat for a question too if you don't want to ask on the mic, but yeah, we're still in this box area. So this usually when it's kind of stuck in a box in this area for a while, I actually like to make this darker and just, this is my little trick I do for myself. You know, everybody can have their own little trick, but I like to do this so that it reminds me that I shouldn't be trying to look in here for anything. Because one thing that you're all going to experience is when you're just sitting here bored, looking at the screen for a while, you start to get ideas. Out of boredom, you might start trying to make trades when there's not really anything to look for. So you have to find ways to either distract yourself or remind yourself that, oh, I'm not looking for a trade in this area. And this is my way of reminding myself. It's the box that we have here. I like to make it darker. You know, so anything that's happening in there, even if I could kind of see it, overall, it's hard to see. And because it's hard to see, it reminds me that, oh, I shouldn't be trying to look for something in there. So that first trade we took, you know, that was the initial bounce trade, which I feel pretty decent about taking that one, but I don't feel confident to take a follow-up trade. So that's why after that, I didn't follow it up. However, if it was to break out of this box and then return, I would be interested in looking for a follow-up trade, but not till it breaks out. So I have to see that first. Same thing on the downside. I'm not comfortable taking anything until it breaks out of this box and returns. So this is what this is something I preach a lot, you know, which is let me type it here. High percentage entries plus high percentage targets equals winning trades. So what I mean by this is we don't just take random trades, and we don't take trades that is not a part of a plan. You know, so the trade we took, you know, it's coming off of so I already had this support level here. You know, when you all came here, you already saw I had this big red line here. So this is what I call a support level. Support means it's a level that's important where the market tends to come down and bounce, right? So where is it coming down here again, and it's likely to bounce. So that's what I call a high percentage entry, okay, when it's at a very important area like that. And as we can see, yeah, it's starting to bounce up from there, right? So we've seen it came down there. Actually, let me just put this on this chart. We see that it came out there, it bounced off. It's coming close again. It keeps bouncing off of it. You know, it just keeps pushing away from it. Will it push super high and go to an all-time new high? I'm not convinced that's going to happen yet. However, we can see that, you know, this whole area around that red line, it just, every time it comes around there, it just keeps getting pushed away. So we can see that there's a lot of, what is it? Force trying to keep it away, trying to say, don't come around here. Like, push back the other way. Eventually it will break through, but there's going to be a fight first, you know, and that's what's happening. It's the market is trying to push lower than this, but there's a lot of fight here that just keeps pushing it right back up. And so that's what we call a support level. Support levels where the market tends to hold there. You could come all the way here, but once you get here, it's likely going to hold here and just push it back away. Does that make sense?
Yeah, it does.
Yeah. Have you heard the concepts of support and resistance before?
Yeah, I have.
Yeah. Oh, so you already understand that. Do you?
Yep.
Okay, great.
A little bit, but
okay. Well, did I clarify it for you then?
Yeah.
And support and resistance is the same thing. The only difference is support is under. Support is where it tends to hold under, and resistance is where it tends to support on top. Well, I mean to hold on top. Like, let's pretend this is resistance. So it'll go up here, same thing, it'll push away from there.
Yep.
So, and also, in addition to that, have you ever heard of the concept of support turns into resistance?
I'm not sure.
Okay, sure. Yeah, and that's good. So I can just review that real quick too. Yeah, while we're waiting and nothing's really going on, it's good for us to do kind of review some of these things and just understand it better, because so when we actually see it live, then we're all on the same page. Let's do this. Oh, okay, here we go. So you know, this is basically the concept here, which is, let me try to get that back. Okay, let's try that again. Not this one. This one. So, yeah, the main concept of support becomes resistance is laid out here, which is basically, this is support, right? This is where it's going to hold under it. Like, let's say this is the market activity. Once it breaks below support, that same line that was support, now it becomes a resistance. So when it comes back to that line, now it's going to serve as the area where it doesn't go any higher. Same thing, if there's a resistance line and it's stopped, every time it goes there, stops. Once it breaks through and comes back to it, now that same line is where it's going to hold as support. You got that?
Yeah.
Okay, great.
I think someone had a question on the chat.
Oh, oh, sure. Let me see. So I don't see the stop loss on the trader chart. What key do I need to click to make it appear on my screen? You can right click on the screen, Will, and it'll give you some options after you enter the trade, and then I believe it's the stop. If it's for a short, I believe it's the buy stop, and if it's for a long, I believe it's a sell stop. But let me know, Will, if you need me to, remote in and help you with that, set that up. Because I can remote in on my other laptop, so. But if you want to manually do it for now, you just right click and then it's the sell stop if you're buying, and then it's the buy stop if you're shorting. So yeah, it's exactly what I suspected, which is that it's just kind of fighting and staying in around this box area, not really truly going above it, not really breaking down. And this might carry on for the rest of the morning. So it is possible that that's our only trade for the morning session. Sometimes we do afternoon session as well, but mostly just morning. So one thing we want to avoid, which gets people in trouble in many markets, whether it's Forex, whether it's even futures market or even the stock market, and was it in crypto too, is the futures market is open 22 hours a day. So the futures market pretty much so from, let's just say 3 p.m. to 5 p.m. All right, it's closed. And then Saturday and Sunday close. But it opens on Sunday 5 p.m. Yeah, it's kind of weird because it opens on Sunday. Opens for the week. And then Sunday, and then Saturday 5. Oh no, actually 3 closes for the week. So basically it goes from the futures market opens from Sunday 5 p.m. to Saturday 3 p.m. That's the main gist of it. And throughout the week, right, all the way from Sunday 5 p.m. to Saturday, every day it's open 22 hours a day. The only time it closes is 3 to 5. Does that make sense? I don't want to be confusing everyone. Yep. But basically it's open all week. And oh, my bad, I said Saturday, I meant Friday. It's not open at all on Saturday. Yeah, so basically it's Sunday. Maybe we'll put this under. All right, so it's basically open Sunday to Friday. It opens 5 p.m. Sunday, goes all the way till Friday 3 p.m. But every single day, like Monday, Tuesday, Wednesday, Thursday, and Friday, it's closed from 3 to 5. Around that time, it's open. Like we can trade anytime. But the key to being consistent and making money in the market consistently and being successful is limiting our time. Just because it's open 22 hours a day does not mean we're trying to trade 22 hours a day. This is the part that gets people in trouble. And it got me in trouble for many years. But any market that's open this many hours, it's trouble. Because people think that because it's open that many hours, they're gonna come trade and make money for all those hours. Like the results that I showed you guys, this is for 1 hour of trading per day. You know, if we were gonna try to trade 22 hours a day, our results, it could be good, but it could be worse. You know, because for peak performance takes, you're not at your peak performance for 22 hours a day. You're probably at your peak performance, honestly, hour max, but maybe per session. So it's like we that's why I say in the afternoon, sometimes we come back and see if there's another trade. Sometimes, most times not. It really depends on the day. But within that 1 hour a day, you know, and we've been able to produce these kind of profits. So, and this is no joke. So anybody who feels like they need to be trading 10 plus hours a day, in fact, most people who try to trade that much don't even make these kind of profits, or first of all are not this consistent, but can't even make these kind of profits that we can make in 1 hour. So don't ever feel like it's open that many hours, so you have to go trade and try to make money that many hours. Just limiting your time in the market is one of the best things you can do as far as sustaining success. So as we can see, it is starting to push up a little bit. You know, starting to push out of this thing. Overall, we're on a move up in the markets, so that's why I never say for sure we're gonna go down, even though it looks pretty strong. There's always that possibility we could just continue going high, because we've been going up, and although it looks like it could lose steam, it could not lose steam and just keep going. So if we have a bias, we always have to consider the opposite scenario happening, and we have to have a plan for both scenarios. That's why what you're looking at here, this is a plan for both scenarios. You know, that's why I said this is a decision area. I don't know which way it's going to go, but I know what I'm going to do based off of which way it's going to go, or what I'm going to be looking for. So, and this is another thing, another reason why many traders struggle, because they only see the market one way. They only have a plan for one way. But if it goes the other way, what's the plan? You know, so you have to have a plan for both ways. Get that out of there. For me, to be honest, I'm still a little hesitant here, even to take a trade going to the upside, just because we're so high. I'm just reading the overall market structure here, and this is pretty high. Let me thin these ones out. So what something I constantly repeat as well is buy low, sell high. And so we always want to think about where we are, right? So this area up here and this area down here, which one would you say is low and which one's high? Let's call this 1 and 2. Which one's low, which one's high?
1 is low and 2 is high.
Yeah. 1's low, 2's high. So we're kind of high right now. So I don't want to be too aggressively trying to buy here. You know, I'm a little more cautious to buy here. So not saying I wouldn't buy, but I'm okay not buying here is what I'm saying. Like if I was to not, like let's say the market goes super high from here and we miss it, I'm okay with that. And that's another issue that a lot of traders struggle with, the fear of missing out. They call it FOMO. So their fear of missing out overtakes their logic. You know, the logic is to buy low, sell high. But the possibility that, you know, a lot of people think, well, this thing could just blast off to the moon. And it might, right? But back to this, high percentage entries. You know, the first part of this is high percentage entries. Is there a higher percentage chance that we're going to go up versus possibly dip down lower? Well, when we're this high, when we've already moved up so high from last week, I think the chances of it coming down lower is a little higher than the chances of it just blasting off again. Once again, doesn't mean it can't or won't just blast off. It's just that possibility is, I would say, lower. So the only thing that will make us aggressive in trying to chase a move up from here is a fear of missing out. And we want to get that under control. So I'm going to see if I would say if this green bar stays green, it could be interesting. We got to see how things play out here. But it's possible that we just kind of stay in a range sideways here for a bit too. But we did make the first move of what we wanted to see, which is we want to see it really break out of here. Let me actually switch this to like a 15-minute at this point. So we did break out of here right at the support, which I wanted to see. So yeah, this is worth paying attention to, because if it just kind of went out of it a little bit, but barely, that's not very convincing. But this strength here is looking kind of interesting. So this could be interesting. But yeah, as you all see, we had a plan. The plan was I want to see it get out of this box and then return somewhat near it. And that's where we're going to look. So it did the first step, which is breaking out of it. And so now we're waiting for the next step. And so this is what we do every day. We just look at the chart, we map out what we want to see happen, and then we're gonna take our trade based off of that. Yeah, based off of if it plays out the way that we wanted to see it play out. Because it could do this. It could just come up here and it could just drop from here too. So we're looking at a possibility that this pattern will play out. If it doesn't play out this way, if it gets really funky and changes up on us and just drops way down, then of course there's no trade there. Everything I map out is just a possibility, assuming that it plays out. So it's not that we're for sure going to take the trade. It's just if it plays out, we will take it. But if this thing just blasts off way up here, then the plan kind of changes too. Because if it really goes high, then it's never going to come back here. So then we'll readjust the plan accordingly. So that's the possibilities. First possibility is it comes here and then it's going to pull back to this area. Second possibility, if it really goes strong, then we're going to look for a different place to catch it. That's further away from that box area. And it depends how far it goes. So but yeah, so this is all, like everything you guys are seeing, this is all we do every day. You know, just we look at some key levels, we map out trades, and depending on how it plays out, we'll either look for a trade or not. And if a good opportunity comes along, we'll take the trade. If not, we're hands off. So it's almost 10, usually around 10, depending on how the market looks. You know, we make a decision if it's worth staying here. We typically, well, we cut off at 11 because 11 is, well, actually I should break down the hours too. So trading hours, like key trading hours, right? So it's 7, I would say 7 a.m. to 8:15 a.m. and then 9 a.m. to 11. This is all Central Time, by the way. To 11 a.m. and then 12 p.m. to maybe 2 p.m. So if we were ever if we're ever looking at the market, it's these times as far as a day session. Put these together. And then evening sessions is 5 p.m. to pretty much 5 to 10. Anytime in that range.
What are you gonna be trading from 5 to 10?
Oh, same thing. Just all we trade is the ES.
But I thought they shut down at 4.
So hold on, let me pull the hours back. I think I had it on this chart. All right, so here's the hours. It closes from 3 to 5. So we can trade evening anywhere from 5 to 10. Get that?
Oh.
Yeah, so after 10, it pretty much typically dies down and there's really not much good trading. I would say if we really want to push it, it would be 10:30. But 11 p.m. is dead. If you're in a trade at 11, you'd probably be sitting up all night because it's all the activity just dies down. I think sometimes because of the Asian markets and the overseas markets, some of them trade futures like at 3, 4, 5 in the morning. So sometimes we'll see some big movement, but I'm dead asleep at that time, so I'm not even concerned what's going on at that time. And I was like, if we look at today, look at this. This is 2:30 to 3:30. So this is for people from other parts of the world that are trading futures. So there's stuff going on, but we don't need to get involved in that because we have plenty of activity during our hours. But if let's say you work third shift, no, not you work third shift, but I don't even know. I don't know who would even be trying to trade during those hours, but to me, plenty of good trading to be done during these hours, day and evening sessions. So you guys get this as far as the hours?
Yeah.
Yep.
Yeah.
I thought it always just closed after 3 or 4 o'clock. I never went past 2 anyway. So when I was trading.
Yeah, I mean it's actually sometimes evening sessions there's decent evening sessions. So it really depends. Sometimes it's a total waste of time to try to trade in the evening. You just be sitting there all night, and because evening's a lot slower. It doesn't really move for the most part in the evening. So even on a normal trade, you guys see how quick that trade was I took? That trade would probably could take anywhere from 30 minutes to an hour in the evening for that trade to play out. And so I would say that's more for people who really have zero time in the morning or can't make time. But I think it's better to just try to make time in the morning. For people who just try to do something with their schedule. Because like I said, it's just an hour, from 9 to 10 for the most part. Okay, so it did the first part, right? It came out of that box area, and now it's possibly coming back. So now it's worth a look to see if this sequence is going to play out. So what I did here as far as mapping this out, this is just to say this is a high percentage look that we're going to look for a trade. Not that we're going to take a trade, just we're going to look. So And this is the thing, most people struggle with trading because they're not finding high percentage trades, or they don't know how to find high percentage trades. So we want to be able to find those high percentage trades first and get good at finding high percentage trades. And then we can get into the actually deciding whether or not to trade. But most people are just dabbling around, just randomly taking trades here or there. They're not really sure if it's a good trade or a bad trade. They're just kind of gambling. We don't want to do that. So once again, my theme of right here, my theme of the 2% Traders Club, why I changed it to that is because there's a saying, right? 98% of traders fail or lose money. So we want to focus on what the 2% traders do that don't do that, that are actually consistent, successful, profitable. All right. So that's all we want to focus on. Whatever the 98% are doing, most traders you meet online, on a forum, in a chat room, they're all 98%. They're all a part of the 98%. The 2%, you're not going to meet most of them. Most of them don't care to be out, a part of a community or helping others. It's just, that's not their interest. They just want to focus on their trading and that's it. So the goal with what I'm doing here is introducing you guys and people within my circles what the 2% do. Because I'm a part of the 2%, I trade with a prop firm professionally. So in order to even do that, you have to be in the 2%. And they'll assess you and you have to pass their assessment. But once you do that, then you have to actually register as a professional trader, like legally, before you can start trading with them. So when I say I'm a professional trader, it's not just I'm saying that, it's like I actually had to register, as that. So
master trader.
I mean, I don't know. I would say I've taken a lot of time to master this craft. I don't know.
I'm pretty sure
it's hard to say that. Yeah, it's hard to use that word on yourself, but I have taken a lot of time.
You know what they say? It's like, I think it's like 42,000 hours or something like that, or is it like, yeah, something like that before you're considered a master at whatever it is you're doing.
Yeah.
You've been trading for how many years?
Yeah, man. It's like I've been like
you could consider yourself a master, dude, because I mean, you're doing it consistently. You've done it so many years. You've done it for so many hours.
Right.
You probably ran into every scenario you could possibly fall into.
Yep. I have many times. There's absolutely no scenario I have not seen. Yeah, that's why every time you guys hear me talking, I lay out all the scenarios before it even happens, and I have a plan for each one, because there's nothing I haven't seen yet, because I've been trading and studying the markets and doing these charts, sitting here every morning since 2001, and I've even looked at it before 2001, but consistently I've been doing it since 2001, and so I've barely ever missed a morning. And so you're talking about through the dot-com crash, through the housing crash in 2008, the coronavirus crash. So all the crashes and all the recoveries, I've been here looking at the charts, and trading it through all of that. So, and then now we have this new crash that's happening currently, in 2022. So this is nothing new to me as far as a market that's crashing and falling.
Yeah. Yeah, because the other part is real estate is starting to drop, and that also is kind of like a indicator that the stock market might shift.
Real estate is interesting right now, because I've talked to several real estate people, and man, it's such a mixed bag of opinions, because some people say, well, if anything, real estate is just going to flatten. It's not actually going to crash as far as prices.
All right.
But there are some things that give the threat of a crash in the real estate market, but I don't know. I've heard both sides. I'm not deep enough into that sector to really have a strong opinion, but I've heard good arguments on both sides. What's your thoughts?
Well, I mean, from the articles I've been reading, and some other stuff that I've been talking to some other friends that are agents and stuff like that, and
yeah,
they're kind of predicting that it might hit like it did during the bubble bust, but it won't be as bad. But they say it's good because it's allowing the market to adjust itself.
Yeah.
And obviously, I think the government is trying to kind of push that process along by hiking up interest rates and stuff like that to kind of level out that field. But
yeah,
I don't know. I'm curious to see. I mean, obviously, real estate has always been something that's good to get invested into, but
right.
Again, I do see it going down, but again, I feel like it's just going to correct itself. It's going to level itself out. And that's how I feel about it. But who knows, man? We might, depending on how the economy moves and how government changes policies and things like that, all of that affects everything,
Yeah.
Key example is gas. All because there's a war in Russia and Ukraine, they hiked the gas prices up,
Yeah. Yeah, man. I don't know. There's a lot of manipulation going on all in every sector. They call it the everything bubble this year. Like everything's in a bubble. And so it looks like something catastrophic might happen at some point this year to tank a lot of markets. Like the risk is there.
Do you ever trade in like commodities, like like in food and stuff like that, like corn and?
Oh yeah, so yeah, I guess that would be more of like the agriculture sector, and then I think commodity is more like gas and oil and energy. Well, I forgot, but no, I haven't, but I've watched it, and it's one of those things where we could dive into that, right?
Yeah.
The thing is, I don't want us to get into a mind state where we're looking for money in the markets. And once again, I think that's a 98% habit where they're constantly looking for money. It's almost like they treat it like a casino where, okay, let me go to the slot machines. Okay, now let me go to blackjack. Okay, now let me go to the poker. Like, they're just hopping around. And I don't know.
As opposed to like Is it like as opposed to like sitting down and really trying to learn how to play poker as opposed to like trying to play poker,
Yeah,
blackjack?
yeah. Perfect. Yeah, perfect example. I always say, if you're gonna treat the stock market like a casino, treat it like the people who actually make money at the casino whales. Look at all those poker players, right, on TV that always, they're the ones who go to the casino. I mean, they're pretty much almost always leaving with money.
Yeah.
Why? Because they take time to master the craft. They're strategic, they're methodical in the way they approach poker, right? But then there's the everyday person who goes to the casino, just goes, sits at the poker table, goes all in almost every hand, tries to play every hand. Yeah, and a lot of the professional poker players, they fold a lot of hands. They probably fold most hands. So I see it as the same way. We don't need to trade everything. We don't need to take every trade that pops up, and we don't need to go here trying to trade everything. We're just strategic and methodical, and we take what's ours and we make sure we leave with a profit every day, or not every day, but as many days as possible.
Yeah.
Hopefully every day. But we want to. So hold on, give me 1 second. I'm trying to upload this picture real quick. Yeah, I don't know where I saved it. Okay, well, anyways, wait, what point was I just making? What's the last thing I just said? I was gonna build off that.
You were talking about
I'm trying to leave green every day, right?
yeah.
Oh yeah. So there's 253 trading days in a year. That means we have 253 days to. That means it's a marathon. Not all of our money is going to be made in one day. So the problem with most traders, they're trying to make 1,000, couple thousand, however much money every single day. There's 253 days in the trading year. You don't have to make all your money in one day or even a couple days. Many more opportunities are coming, and we just take the good ones, and that's about it. Just take the good trades. Once again, where is it? High percentage entries. We only want to take high percentage entries. If it's not a high percentage entry, leave it alone. And that's the same thing like the casino whale approach. If it's not a good hand, fold it. So it's not to say that those casino whales can't win, right? And can't make money if they have a bad hand. It's just they're strategic. They're not just gonna jump in a bad hand and a low percent. They have low percentage of winning that hand, and they're just gonna throw away their money. So same as us. We're not just gonna jump in any random trade and throw away money. And we're just gonna take high percentage trades and ensure that we make money every single trade. Not that we ensure that we make money, but give ourselves the best opportunity to be profitable with every trade we make. And if we do that over and over and over, right, for 253 days in the year, we should come out pretty profitable by the end of the year. And that's a 2% trading habit right there. So we go chasing money, then we fall into the 98%, and we get we end up with the same results as them. You know, but we stick to high percentage entries, then we have a chance to be in the 2%. Or we will end up in, I mean, if we have a good plan and we're executing, we'll end up in the 2% if we're following this. You know, but it's a lot of it's psychological. It just the greed, the impatience, the fear of missing out, all that stuff plays into it and makes people chase trades, makes people abandon the plan, and then they just end up giving away all their profits. So, you know, what I'm showing you guys, if you look at this, you guys might think, wow, his charts, he doesn't have much on it, you know, like it's too plain, it's too simple. But it's like those people who have all these crazy things on their charts, you want to see, okay, well, how is your performance, you know? Because performance matters more than how complex your chart looks. You know, if your chart's really complex but you can't perform well with it, then it really doesn't matter how great your indicators are, how beautiful everything looks. And I think a lot of people just randomly go on YouTube or Google just to like grab stuff to throw on their chart. They don't really understand how to use it or what it means or if it's even useful. They just go grab random things to slap on their chart. You know, the only things on your chart should be things that you know you need, and it plays a role in how you're going to make your trading decisions and how you're going to see the market. So that's why I just strip everything down. It's not to say I don't use indicators here and there too, but I don't want all that stuff on here before you guys understand these simple basic things as far as how to find a support and resistance, and how to trade off of support and resistance. Because to be honest, this alone could make pretty good money without ever adding an indicator on your chart. Just being able to trade off of support and resistance alone, somebody could say, wow, that's all I need. So, and same thing as what you asked about, like trading agriculture, trading commodities. It's like, the question is, do the best you can trading one thing, and then ask yourself, do you need to step into a different sector and start trying to trade there? And it's not to say that you shouldn't or you can't. It's just, let's see how you can do in one sector first. Like, get super good at one first, because everything moves a little different. Like wheat, corn, silver, gold, oil, they all move differently than each other. They all have a different behavior pattern. And same as the ES, different behavior patterns. So if you're jumping around different markets with different behavior patterns, it could throw you off, because the ES is much slower and steady. So it's good for especially newer traders. Markets that are moving fast and crazy, like NASDAQ, even gold and oil, sometimes it could be really tough for newer traders. So yeah, that's my thoughts on that. It's just get really good at one, get very familiar with one. Because once you get really good with one, you can apply that to any other sector, any other trading instrument or anything. But you'll likely find that you don't even need to move on from it. If anything, you could capitalize even more on it. We're trading one contract. We're taking one position. If you compare it to like stocks, it's like buying one share. So you get really good at this. Eventually you could buy multiple shares, multiple contracts. That's how you really make money. You master one thing, and then you could leverage and add more contracts. You know, like these profits here, these are all one contract. Okay, this is all one contract trading. Some people trade 3-4 contracts to make this much in a trading session. We've been making these with one contract. These are results from one contract. When people get really good at this, we can start going multiple contracts. That doubles these numbers, doubles or triples these numbers. So
what's the highest contract you've done?
Most I've done, I went crazy for a short period of time. I think I went 6 to 8. And yes, I was seeing insane profits, but the losses are insane too.
I bet.
Yep. So what happens is, remember this 2% trading approach. 1, all right, so just always remember this. This is the 2% trading approach. All right, protect your account first, make money second. So going in multiple contracts is not account protection. Or going in multiple contracts before you've even proven that you can make money with one contract, that's not account protection. That's you're trying to make profits before you've learned how to protect your account. And so that's why I do this. That's why the way I demonstrate and show everyone is we're only going to mess with one. And we're going to prove that we can be profitable with one. All of us. And when we can all prove that, we'll start dipping into 2. And when we've proven that we can protect our account and be profitable with 1, then we're going to start making real profits. And these are even real profits as is, you know. So once again, if you do things the right way and you just keep sticking to that, you may find out you never even need to dive into all these other things that sound exciting and lucrative, you know, such as different sectors, going in 4 or 5 contracts. You could be pulling in the kind of profits people who are trying to trade 4 or 5 contracts pull in with only 1 to 2 contracts per trade, if you just keep sticking to doing things the right way. So, does that make sense?
Yeah.
And so that's all we're focused on. We're focused on how to make money the right way by protecting our account. And when everyone can do that, we're going to start moving on to really, really making profits. You know, but the 98% go straight here and they don't even think about this. The 98 have this reversed. They're chasing profits while not thinking about account protection. So what we do, right? It's less exciting. It's a little more boring. right? Because it's a lot of waiting. It's less trading, less frequency trading. But that's because we're doing this, right? That's because we're focused on that as our top priority. And same thing, like I said, this casino whales, if you watch them play, they fold most hands. You know, there's a lot of boring time passing because they're worried about protecting, right, their chips. They're not just randomly putting themselves at risk chasing money. So the 2% of traders who are successful in making money is the same as the 2% of poker players who make money. You know, they're protecting themselves and then making the money second. After they've put themselves in position where they're protecting themselves, then they can make the money. Otherwise, we just make money and we throw it away. We make money, give it away, make money, give it away. You know, we'll never keep the money. So once again, this is day 11 and it's about 10:30. It did not fall to where I wanted to see it. It went up here. I wanted to see it come all the way back down there. Same thing. My plan was I'm not trading unless it comes back down here, and it did not. It just kind of dipped a little bit and went higher. So I'm not. It's not to say that scenario could not have played out. It's just that's not the scenario I'm interested in, and I'm okay missing that. So it's the same thing. Once again, this is a good comparison. You see poker players all the time, right? You see on TV, they'll show you everyone who had every hand and then the hand that they folded even. And then they'll show that on the flop and everything, it comes out, wow, they would have actually dominated that round and they would have beat everybody who stayed in, right? So they missed out on that opportunity, on that big opportunity. But they're okay with it. They don't think about that. You know, many more opportunities ahead. So same thing for us. This is the opportunity we wanted down here. It did not get down there. It just went a little bit here and then it went back up. So we missed this and we're okay with that. We're not going to catch every single move. And we're okay with that. And we have to be okay with that. But yeah, it's about 10:30. From what I see, there's a half hour left. So every time it's like 10 or 10:30, we have to make a decision. Is it worth continuing to sit around and watch the market or not? And if not, like, is something going to happen in the next 30 minutes? Like a decent trade or anything? And from what I'm seeing, probably not. You know, I like I said, I'm not in love in the first place with even continuing aggressively going long here. But this was the only thing I would have wanted to do in this scenario, and it didn't happen. So at this point, what would be the trade? Same thing. I would still like to see it come back down here at this point and possibly take a trade out that. Do I think that's going to happen within the next 30 minutes? Possibly, but yeah. I'm kind of okay with just saying that's a wrap. You know. So once again, limiting our time at the screen is key to our success. The more we keep ourselves here, the more enticed we will be to just get in a move out of boredom and things like that. And like I said, it's just like, go ahead and see it like the casino, right? What happens when people stay too long at the casino? You know, everything, they pretty much lose everything. So they have to know how to leave with their profit. And so we have to know how to lead with our profit. So the results here is because we're leaving with our profit. Right? That's why we're mostly green, because we're leaving. So today will be day 11, another day we left with our profit. Does it mean we can't make more if we stay? No, it doesn't mean that. We can still make plenty more, probably. But depend on the situation. And is this a situation where I want to continue looking for a trade? You know, I'm not in love with the look today. You know, it's moving up, but it's moving up at a very high portion of the market. So low was back here. We're now high. Am I really that interested in continuing to stick around hoping for a long trade? Because this next drop here, maybe it'll drop here and just drop all the way. So the situation I'm not in love with. There was one trade I was willing to take, and that was if it came back down here, but it missed that. So that opportunity is gone. And so that's a wrap. Any questions? So this is our summary, right? Just one trade. So obviously just 100% day, and that's that. You know, some days if there's more opportunities, it's more active, the market's in a better position, we get more trades, and then that's why our profits can be higher. Like we don't determine how much profit we get every day. Whatever the market gives us. When it's slower, the profits are smaller. When it's faster and more opportunities, profits are higher. So all we do is we have a plan, we stick to our plan. Whatever the profits are at the end of the day, we walk away happy knowing that we followed our plan and we left with a profit. We do that day in and day out for 253 days a year. We should end up with a pretty nice profit at the end of the year. So yeah, any questions, comments?
Nope, not for me, dude. Just appreciate your time this morning. It was just nice to kind of see, your thought process and, just how cautious you were and how you kind of look both ways, or, you have a plan for whichever way it goes. So it kind of taught me just to kind of look at the bigger picture, and look at it from all angles.
Yeah.
Sure.
Yeah.
Sure, yeah. Yeah, I'm great. Found some value in it.
Likewise here, Vong, man. I just like how you break down stuff. You're not sugarcoating nothing. That's just straightforward.
Yeah.
It's the patient part for me.
Mm-hmm. Yeah.
My mind's running at 1,000 thoughts per second, and it's like,
Yeah.
It's like sometimes, it's like you were saying, like you just don't want to bet on everything, and sometimes I think that kind of gets in the way, like that mentality gets in the way to be like, oh, this looks like a good spot,
Yeah, totally. That's why I don't know. I kind of see these sessions more like a pilot and a co-pilot, right? Or a pilot in training, where it's like you're sitting along with the pilot while he's driving through or flying through all the turbulence and all these conditions and all these emotions you haven't felt yet. You get to kind of just be in the midst of it all. And yeah.
Well, it's kind of like that conversation. It's kind of like the conversation I had with you, right? When I was telling you that, it's kind of like, how can I put it? I practice and I'm practicing certain techniques and I'm practicing stuff and I'm hitting my goal, right? Like I'm hitting the mark. And then I go to do a live trade and it goes the opposite way. You know what I mean? Like there's that too. And that's something too. And I think maybe I'm just kind of, I don't know if I start
doubting myself because it's a live trade compared to like when I'm just practicing.
Yeah.
But that's something that I've been kind of trying to deal with too, like mentally wise, like just kind of seeing it for what it is and really trying to like just stay on what it is that the technique that I'm doing.
Yeah. Well, first of all, that's a good point, and that's not only you, that's everyone. You know, when you do simulated trading, you're able to just focus on the plan and the strategy. When you're doing your real trading, well, now your money's on the line. So you have different thoughts that enter your head that can throw you off of your game. You know, and that's typically what throws people off. And you know, everyone goes through that. But you go through it enough, you learn how to navigate through it and execute. But you have to have enough reps. I would say if you can do 2 to 3 weeks of simulated trading where you're executing your plan perfectly, and not perfectly, but really well. You're following your rules. Don't even worry about the profit or loss. Just follow your rules, stick to it, and grade yourself off of that. How well did I follow my plan and my rules today? You know, did I go chasing money? Did I break any rules? Like, get that part down really well, or understand if you've gotten that part down really well, because you know, like you've experienced, once you go to the live market, a lot of your habits come into play. And if you've developed bad habits during the simulated trading, they will come out in the live trading, and it will affect your trading. In addition to that, just a lot of people are not totally honest with themselves. Not saying you fall into this category, but this is a common thing where they'll take random trades and they'll make money, and because they see profit there, they'll think, oh, I did good today. But when they really go back and look at it, it's like, well, that was a random trade that wasn't a part of their plan, and they just kind of lucked out and made some profit. And they will see that as, oh, I had a good day because the last couple of days I made profits, even though last days were really risky and they got kind of lucky. So, you know, to really move on to live trading and be effective, you got to be brutally honest with yourself during the simulation about everything you're doing, if it's good or bad, and you're getting those things addressed. Because once you go live, you just have to be totally prepared. I mean, as much as possible. So if there were things that you had noticed during simulation that were left unaddressed, they will come out in the live, and it'll hurt your real account in the live. So